Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Rebecca Patterson here for a good conversation to start the morning off. And of course, we devolved that to a dollar discussion and on from there. She's focused on crypto. We'll get to that in a moment. Her effort at the Council on Foreign Relations is noticed. I can't say enough about the new edition of Foreign Affairs magazine. You'll see it in the next couple days or so. It is just absolutely extraordinary. I've got to go to dollar here right now. Is dollar hegemony, is it threatened by all that's going on in Washington?
Longer term, yes. I think there is a threat to the dollar from some of these policies. You know, the U.S. relies on demand for treasuries, and the idea that the treasury is going to be the biggest bond market in the world, liquid, safe, always transactional. And if you're putting tariffs on allies as well as adversaries, over time, they may want to diversify away from those assets. Now, there aren't a lot of places for them to go, but one place we've seen clearly over the last couple of years is gold. And you are seeing data showing China reducing its treasury holdings. Obviously, we know Russia did over the last several years. So the policies we're putting forward today, I think, do create some risk. Now, there's new sources of demand that we can talk about when we get to crypto. But when we think about foreign holdings of U.S. bonds, I think that is a source of risk that could push yields higher and weigh on growth.
Do you get a sense that this White House, this economic team at the White House, that they have a sense that, generally speaking, markets do not like uncertainty, whether it's uncertainty of policy, uncertainty of rhetoric? Is that something that has an audience, do you think, down there in D.C., or is it just kind of overshadowed by this is a president that wants to do what he wants to do?
President Trump has said in the last few weeks that he knows there might be some short-term pain to get to these long-term goals. I think there's probably a degree of pain reflected in the markets that would get his and his team's attention and maybe cause them to take a step back, at least temporarily. But I don't honestly know if today, looking at the sell-off we saw in the stock market last week and the continued softness we're seeing this week, registers.
I look at the follow through of all this, and I guess I go back like a lot of people to real GDP. The fact is Atlanta GDP now, a snapshot of where we are right now, is coming in with a vengeance. Mm-hmm. Do you sense a momentum to make some news here on a, what's today? Tuesday.
Sure.
On a Tuesday morning.
Bow tie Tuesday.
Do we have
Taco
bow tie
Tuesday?
Yes, I'm wearing a bow tie.
Bow tie's back.
I got the stitches out from where the damn dog bit me. Just as simple as I can, are we heading towards 2.5% or lower real GDP?
Well, here's what's so interesting, Tom. Last year GDP was much stronger than expected. We've gone into this year strong. We've seen that in the most recent earnings season, but that's all backward looking. What drives the economy is confidence and incomes. So people still have incomes. The job market's still strong outside of certain DC agencies. I don't mean to be snarky about that. But confidence is where we're seeing some question marks. The other piece that's changing is economic surprises. A lot of economists revised up their expectations immediately after the election. What we've seen over the last several weeks now is data coming in below expectations, disappointing. And that indicator coming down, now I want to be careful on causation, but it's correlating beautifully with the 10-year yield. So the market's pricing in 2 Fed cuts again. The 10-year yield is getting lower. All of that is coming hand in hand with both worries about the forward-looking economic outlook and disappointments.
Yeah, to 4 digits, Paul. Patterson's in the room, so we got to, go to 4 decimal points.
Absolutely.
1.8994. on the 10-year real yield. That's an Ian Lingen number.
Top go. These are the top stories on the Bloomberg terminal, Tom. Guess what's number one here? Your favorite, Bitcoin. Bitcoin slides below 90,000 as crypto sell-off gathers steam. To me, I know you're recently out with a piece in CFR on the crypto. I kind of just view Bitcoin as just a sense of risk appetite out there in the marketplace. That's it. Are we saying risk off a little bit here?
Yeah, I mean, Bitcoin correlates very well with tech stocks, which is not surprising. At the end of the day, cryptocurrencies are a form of fintech. So when you see the Mag 7 come down, it's not shocking to me to see Bitcoin come down. If that sell-off, if NVIDIA disappoints tomorrow, I think you see Bitcoin going down further. But it gets me back to our Treasury point earlier. President Trump, in one of his executive orders, is very explicitly supporting the development of digital assets and crypto, and specifically stablecoin. And I want to highlight this because to the degree stablecoins gather momentum, gather assets, they're backed by the dollar ones are backed by treasuries and other cash-like assets. This is a source of demand for treasuries that I think Treasury Secretary Bessent is keeping a close eye on. Tether, has something like $113 billion worth of Treasury and Treasury-like securities today.
Rebecca Patterson with us, of course, on your morning commute and also on YouTube. Subscribe to Bloomberg Podcast, growing each and every day. Can't say enough about YouTube Premium. I'm reading the book, Mark Bertrand's book on YouTube, and YouTube Premium.
Sure.
I'm glad I did. It's sort of slick, and all that. Let's go back to J.P. Morgan and Bessemer's Trust. Is there an underlying to Bitcoin? Please inform me. Where's the underlying to support a theory of Bitcoin?
I mean, Bitcoin itself, to me anyway, remains a speculative asset. And I'm not saying that lightly. The Bank for International Settlements did a really detailed report about a year and a half ago. It's worth reading, talking about the development of crypto. And it highlights, based on a global survey, a very detailed global survey, that the bulk of owners of Bitcoin today are young men under the age of 35, retail investors, and it's a momentum trade.
Yeah, I should say worldwide, folks, and you see me say this on social, the leadership here is Raphael Auer, A-U-E-R, at the Bank of International Settlements. He has the best, whatever your belief on Bitcoin. I mean, Matt Miller should read it.
Yes, exactly.
If you can find his passcode to cash out.
Rebecca, is this administration, I mean, I think President Trump at some point, whether it's campaign or whatever, described himself as a crypto president. Is this a crypto presidency? Is this something where the next 4 years we can see the U.S. regulatory framework support crypto in this country?
100%. I think over the next 6-12 months, we will see regulatory clarity, which is going to allow more integration between crypto assets and the traditional banking system. And I think it probably will get more broad adoption. So it won't just be the young men, it will be more types of investors. And that's good for crypto in that it'll reduce volatility by having more liquidity. The risk one needs to watch is that as it gets bigger and more integrated, it becomes a source of systemic risk. If you have a hack like we did this past week in Bybit, right? $1.5 billion hack of a cold wallet, which is supposed to be safe.
Cold wallet.
Right. A cold wallet is offline.
Dad's wallet after the trip to Sephora.
But if that happened in the United States, we would have contagion. And that, it's not just going to be Silicon Valley Bank. It would be broader. So that's the thing one needs to watch out for. You can have regulation to give them the ability to grow and innovate. You still have to have a few consumer guardrails there.
Our listeners and viewers know where I am on this, and I think Ms. Patterson knows where I am on this. So let's cut to the chase. First thing I did this morning is from peak to where we are now, BitDog is down 20%. That's not a currency. We've got all sorts of IRA, ETF, Eric Balchunas, BlackRock, this, that, and the other doing it. What should we say to those people if we pop down another 10%? I mean, horrific bear markets in the equity market are negative 35%. If we get that in Bitcoin, and we're now letting everybody have Bitcoin, what's going to be the outcome?
Well, again, my concern, I think, to the degree digital assets encourage more financial innovation in the United States, that's great, right? Our financial system is creative and broad and deep, and that helps the U.S. economy. What we need to be mindful of is that the pool of people today, not in the future, but today, who are trading Bitcoin and these currencies aren't necessarily aware of how to save for retirement in a safe, methodical way. This is not an easy path to retirement riches. And if they lose their money, they have less ability to buy a home, to invest for the longer term. So understanding the volatility of what they're buying, that's I hope that these crypto companies do a lot more education going forward to help these people invest in these assets wisely. Right now, I don't see a lot of evidence of that.
Paul, out on YouTube live chat. Thank you. The live chat can be very smart. Subscribe to Bloomberg Podcasts. This guy, one word, tulips.
One of the things
Thank you for that.
Is the regulatory environment. Like in the last administration, the Biden administration, Gary Gensler, I expected him, and I think a lot of people did, that A, he understood crypto, and B, he was going to take a forceful hand in kind of pushing the regulatory framework forward, which most participants are asking for.
Yes.
Yet he did not really. What do we know about this administration, the Trump administration?
Well, in the last administration, there was some debate, fight, whatever word you want to use, between the different regulatory agencies on who would be the lead on digital assets. I think in this administration, we're likely to see a lighter touch, probably led by the CFTC rather than the SEC. I think we'll get some legislation from Congress through probably in the next few months, which will also create a clear path. And these companies need it. They deserve it, right? They need to know the rules of the road, and the banks and other asset managers need to know the rules of the road. So I do think this administration is going to be incredibly helpful on that front. Again, my hope and my ask, if I could be there in the White House today, would be, please don't forget some consumer protection, some consumer guardrails. Do
you have in your head a price of Bitcoin south where everybody starts wringing their hands? I mean, we're at 89,000. Is it 80? Is it 50? I mean, I have no idea.
So my worst case scenario, a realistic worst case scenario, would be that we get some disappointment out of one of the big tech companies, NVIDIA, whoever it is, it doesn't matter. And we get more of a concerted sell-off. Maybe in response to tariffs, China put some holds on U.S. tech companies acting in China, those sorts of maneuvers. You get a bigger sell-off in tech, which is not impossible given valuations, given ownership. And that contagion pulls down cryptocurrencies in a meaningful way, because these investors own crypto, and they own meme stocks, and they own a lot of tech. And so they get hit on both fronts. That could get some momentum and pull down the broader market. I don't know if anyone buys that dip, because they just need to be covering their losses at that point.
Well, again, and the retailization of this is where I have my radar up. Rebecca, thank you so much. Rebecca Patterson, way too early. Thank you so much for coming in.
My pleasure.
With the Council on Foreign Relations and all of her work on Wall Street, particular comments on the dollar. I'll try to get out the Bank of International Settlement essays from Raphael Auer and company. They're absolutely brilliant, very sobering. And as Ms. Patterson mentioned, the depth of their research.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Joining us now here with markets lifting a little bit is without question our conversation of the day. There are mysteries out there, including mysteries of what is going on in the Kremlin. I have forever and ever been humbled by me getting the Yeltsin call so wrong. Angela Stent is definitive on this, senior fellow at Brookings and at Georgetown as well. On her book, Putin's World, was my book of the year a long 3 years ago. Angela Stent, with great respect for your decades of work, I saw the headline, I believe, in the Washington Post that said basically the United States sides with Russia within the United Nations. I'm making a generalization there, folks. What did you think when you saw that? What do you observe to your work, Marshall Goldman's work, all the way back through the decades, to see a headline, America sides with Russia?
Well, Tom, this was truly shocking. I mean, who did we veto the resolution condemning Russia with? Our good friends, North Korea, Russia, Belarus, Syria, the Central African Republic, Nicaragua. I won't go on. Even China and Iran abstained from that vote. So Ronald Reagan would be turning in his grave, as would many others. It's really quite remarkable. And if you think of what the U.S. has stood for the past 80 years since the end of World War II, through the Cold War, through the post-Soviet era, it's quite remarkable that we veto a resolution that condemns the Russian invasion of Ukraine.
What should Marco Rubio do?
I think he's in a very difficult position. We know what he has said before he became Secretary of State about Russia, but right now all of the officials in the Trump administration are repeating the same line. It's complicated. Russia was provoked. So if he wants to stay in his job, he presumably has to repeat those lines too.
Angela, you mentioned 80 years of precedent, U.S. policy vis-a-vis the former Soviet Union and Russia. Should we be surprised that this has changed literally on a dime and we've had no real, opposition from anywhere in the U.S. government to this policy? Should we be surprised that it changed so quickly?
I think we should be surprised by the rapidity. I mean, we knew from President Trump's first term that he admires Putin, that he wanted to do a deal with Russia. But to have this happen so quickly within a month of him coming to power and with everyone, the top officials in his administration, repeating this line, we should be. Now, there are Republicans in Congress who have pushed back against this, but there are not that many of them. And I think, we have to wait and see whether there's going to be more opposition to this line. The Kremlin is delighted. I was just reading the remarks of the press secretary, Dmitry Peskov. Finally, the United States has seen sense and has understood, what the real situation is.
I think of At Dawn We Slept, the failure of our intelligence of Pearl Harbor in 1941. Angela Stent, we are sobered by the failure of our intelligence with the collapse of the Soviet Union. Would you suggest that we have any clue what's going on at the Kremlin or within Mr. Putin's orbit?
I mean, I think we have some clue. We know that they are absolutely delighted about what's happened recently. They're even talking about that publicly. We have a pretty good idea that they're not interested in a peace settlement in Ukraine, but they're certainly interested in improved ties to the U.S. Let's restore relations. Let's have a summit. Let's have President Trump visit for Victory Day, May 9th, 80 years since the end of World War II. Visit. So that we know. Do we know what goes on in the very inner circles? Of course not. But we can gauge some things by what they've said.
This is why we love having Dr. Stent on, folks. Could you imagine the President of the United States in Moscow for those celebrations of Russian might in May?
Yep.
I've never once framed that.
I never had that
as
vision in my
Angela
head.
Stent only can do.
Angela, what do you...
I can. Yep, I can.
Angela, what do you think the response should be from rest of the world? I'll just leave it there, rest of the world, as it relates to this changing U.S. position vis-a-vis Russia.
Well, we've just had President Macron here. We have Prime Minister Starmer coming tomorrow. The Europeans are really trying to push back. President Macron did a good job, a valiant job of trying to persuade President Trump that, we have to work together and that, the U.S. isn't getting stiffed by Ukraine. He in fact corrected Trump about loans versus money given to Ukraine. I mean, the Europeans are trying their best, and they've come to realize that they're going to be alone in this. If they want to support Ukraine going forward, they're going to have to do it without the United States. Now, for those countries that abstained, which is a large number yesterday in the General Assembly, they're just going to shrug and say, this is a European conflict and it really doesn't touch us that much. But certainly the Europeans, and I would say our Asian allies, are very concerned.
To extend, Angela Stent, the list of U.S. and Russia is, Israel, Haiti, Hungary, Palau, Marshall Islands, Burkina Faso, African nations I can't pronounce, Belarus, North Korea, Syria, Mali, and Nicaragua. What is the ramification of our diplomacy? To Paul's good question moments ago, How do we do Kissinger diplomacy around the world, given that beauty list?
Well, I think that the Trump administration is still believing, for instance, that if we have this rapprochement with Russia, Russia will decide to distance itself from China and will reverse course. I think that's highly unlikely, but I think that's one thing that's going on here. And I think it's also the U.S. trying to show to those countries that supported us, and I guess those who abstained, that, we're not necessarily taking sides in this. We recognize that Russia is a great power, and we're going to try and do something different. Yeah.
My fondest hope is the Secretary of State will read Angela Stent's Putin's World. Dr. Stent, thank you so much for your commitment to Bloomberg surveillance. She is with the Brookings Institution.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Joining us now, and this is really important, Calvin Say joins us right now with BNP Paribas. The BNP Paribas heritage is a carefully constructed, cautious view on the economy, back to Julia Coronado, back at least 15 years or so. In the sum total of your work there, do you see a dampening of GDP off of all the events going on right now?
Thanks so much for having me, Tom. This is the question that every client is asking us. We're getting so many different policies from President Trump. The aggregate of these policies, when we think about immigration policy, especially trade policy, should, we think, begin to slow growth down in the second half of the year. But even more importantly than that, where we're very out of consensus, is that we think that these policies are going to be generating significant amounts of inflation. So despite that slower growth in the second half of the year, it may be a tough spot for the Fed. And the Fed, we think, will keep rates on hold for all of this year.
We haven't done this recently. I mean, this is a whole new world after all. Is what you just laid out good for business? Is it good for Brian Moynihan at Bank of America?
We think that this is a really interesting environment in that Trump 1.0 differed from Trump 2.0 in one really major way. And that is, Trump 1.0 was very combative with the Fed, trying to get the Fed to lower rates at every single point that they could. This time, the administration is really focusing on trying to control the part of the yield curve that they can exert more control over, the back end of the curve. And with that, we think that we should be seeing lower 10-year yields relative to 2-year yields this year, which should be good for the everyday American, as that's the part of the U.S. yield curve where most people are borrowing at.
Did you just say inverted yield curve?
I know somebody who talks about inverted yield curve.
Holy mackerel.
Cam Harvey done it, Duke.
Yeah.
So what you were talking about in the economy, slowing growth, higher inflation, that's stagflation? Is that what the economist calls stagflation?
We're not necessarily going to call it stagflation, but we could call it slowflation. We think that growth will slow to slightly below trend later this year. We're not going to see a recession, we don't think.
Okay.
But we think mostly it's going to be the inflation side. We are very out of consensus on inflation, and we think that tariffs are going to generate significantly more inflation than people think, and that we think is going to put the Fed in a pretty tough bind.
That's not a good political move, from what I remember. So what does that mean for this Federal Reserve? Should we pay attention to what these folks are doing?
So we at BNP Paribas were very early and very out of consensus in the beginning of December when we had a no Fed cut view for all of 2025.
Interesting.
I'll take it a step further from there. And I'll say most of our competitors, I think that the asymmetry is still toward cuts. In other words, it's more likely to see cuts this year than hikes. Our view is different, where we think because of these inflationary pressures that are to come, we think that there's probably an equal chance that the next move from the Fed could be a cut or even a hike.
Well, frame out your GDP call into your, the remit that you have there, which is in, basic strategy of the Americas and the larger, bigger picture. Are we sub 2% real GDP at some point out this year?
That's a great question, Tom. We think that 2025 is going to be a tale of two halves. The first half of the year should be above 2% growth. And this is largely because of animal spirits that have come out after the election, strong momentum. But the second half of the year, we think that growth is going to slow down.
Labor Day and the world's falling apart. This is really important with your heritage. Do you have a belief that Washington, and particularly the administration, will adapt and adjust to a sub 2% statistic somewhere where the Red Sox decide if it's playoff baseball?
Our clients are asking us these exact same questions. We think that the administration really does not believe that their policies are going to weigh on growth. So we think that Trump, if we think about what he really campaigned on, it was really two major issues, and that is to be hard on trade and it's to be hard on the border. Both of these are going to weigh on growth. We think that President Trump is going to push very hard on them, and if our forecasts come true and growth does weaken, then perhaps at that point the administration could pull back, but we think that they're certainly going to deliver first and maybe pull back later.
So as a macro strategy for the Americas, what are you telling your clients where to allocate capital these days, given that background?
This is a conversation we have every single day, and to us, what we think is one of the more attractive investments for clients right now is to own long-term bonds in the United States. And the reason I say that is because, very interestingly, something that we've been writing about quite a lot is this theme that's emerging where we think that we're now seeing a more bond vigilant administration, which is now thwarting off the bond vigilantes. And that's really evidenced over the last few weeks by Treasury Secretary Bessent, who's basically telling you he's in no rush to increase supply in the United States. And this is opening a window of opportunity, we think, to invest in long-term bonds in the United States.
Cut to the chase. Are you loading the boat in the 10-year right now?
We like the 10-year, but we like it even better in inflation-protected form. As mentioned before, we're very worried about inflation, so we like tips.
Yeah, Paul and I don't care. The reason we had you here is Alex Steele said, can you find someone who can figure out hotel rooms in Paris? You run BNP Paribas. How do we get a hotel room somewhere in the vicinity of, the first arrondissement in Paris? It's impossible.
For us, from a macro perspective, what we're certainly going to see this year with a very strong dollar, which is what we're forecasting, is more tourism from the United States towards the rest of the world. That, all else equal, unfortunately for you, Tom, is probably going to be putting upward prices on a lot of hotel rooms.
It's outrageous. I mean, I was there a couple months ago. Long story short, I have an offspring there. And it was, I was literally foaming over what has doubled in price. I mean, it's a boom economy. Macron's with Trump. Me and an Airbnb.
Yes,
figure that one out.
Yeah.
Macron and Trump are sitting there. Does anybody have a clue the boom economy of Paris?
When we speak to clients, what clients are really concerned about right now are really, I think largely, as you say, what's going to happen with inflation. And this is what you're feeling every single day. Inflation affects all of us.
Right.
And that's why we've been quite concerned. What we're worried about is that inflation expectations today are less stable than they've been at any point over the last 40 years. Yeah. Exactly as you're saying. You can feel it everywhere. And with inflation expectations less anchored than they used to be, what we think is going to happen is that as big tariffs occur, this is likely going to result in more second round impacts on inflation, continuing to push inflation higher, which is why we think the Fed's going to be more hawkish than people expect.
That's how you get out of NYU is you start talking second order, second round.
That's
how you impress professors. Calvin, thank you so much. Calvin C. with us with BNP Paribas. Brilliant. Are you based in New York?
I am now, yeah.
You are now? Okay. Yeah, he was on the Air France shuttle and that ended. Okay. Calvin, thank you so much. Don't be a stranger. With BNP Paribas, head of macro strategy Americas.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
The front page was Lisa Mateo, the Lisa Mateo Hour. Let's get right to it. What do you have, Lisa?
Well, yesterday we were talking about Apple's plans, right, for more jobs, U.S. investment. But experts are saying that they're just sugarcoating their investments. This was a Wall Street Journal analysis that said that Apple's new job promises, they're just slightly ahead of their recent 4-year pace. They also said that the spending pledge is roughly on track with its recent investments. So the Journal spoke with these experts and they said that a lot of companies who do this, they cater to the administration's needs, right? They just sugarcoat, repurpose existing investments. They said about 80% of those announcements and spending that was already in the works. So they're saying it's nothing new. Yeah, they're saying it's nothing new.
Yeah, Mark Gurman from Bloomberg News, he was in on Bloomberg Intelligence yesterday, and he has a great piece out on the Bloomberg Terminal yesterday, kind of laying out all the numbers. So it's good stuff. I mean, they're spending money in the U.S. It's all good. Apple can claim a victory. President Trump can claim a victory. But the reality is it wasn't that much incremental.
For our listeners and viewers worldwide, do the three of us have news fatigue right now?
We're just
I
getting
do. I'm
started
like
here.
afraid to
started
look
here.
at the cell phone. It's like every minute of the day.
You get another alert.
What's the next red sticky or red banner I'm going to see? Next.
It is. This one, you probably got a sticky on this. DoorDash paying about $17 million to drivers in New York State. Here's the reason why. So the drivers are saying that the delivery service cheated them out of the tip money because they applied it to their base salary. So basically, the money would go into this fund. About 60,000 or so drivers are eligible, so they could get up to about $14,000 each. But what I didn't realize is that the delivery worker, they were guaranteed, let's say, $10, right? You make a delivery, and then the customer tips the worker $3. But DoorDash would only pay the worker $7, and they would keep it because you couldn't see the breakdown.
See, that's
in your
when
pay.
I click on it. If you're going to tip somebody for an Uber or whatever like that, you don't know where that's going. As opposed to putting a couple bucks in a jar, sitting in front
I'm
of a bartender or
told
something.
this is a huge deal.
Because
Nationwide.
they don't show the break. They're not transparent about it.
This is a huge.
And this goes to the whole tipping environment out there. It's changed in the last 10 years. So here's the rule of thumb I use. If I'm standing, I don't tip. If I sit, I'll tip. So you go up to a counter and you buy something, blah, 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 and they turn your screen around for you to tip, 0.
Do you feel the pressure, though? Do you feel that?
Not anymore. I used to, but now I've got my new strategy, and I feel very comfortable with my strategy.
So if you're in God's basement at that club down in Seagirt,
Yep.
and you're having a scallop standing up, you don't tip.
Correct. Exactly right. Exactly right.
Exactly.
Although I've tipped really well at the Parker
What's it
House
called?
over the years.
God's basement?
God's basement at the Parker House.
basement.
Over the
Parker
last
House.
45 years, I've tipped very well at the Parker House.
They know him when he works.
They know
when he
Mr.
walks
Sweeney.
in.
How are you, sir?
Mr. Sweeney,
Yes.
good to see you again. You
Have a
young
seat.
thing, you.
Last one. This was in the New York Times. Lawyers for Paramount and President Trump have actually agreed to appoint a mediator in that $20 billion lawsuit that he had against CBS. So mediator could actually help them reach a settlement. Well, whether they will, it's uncertain, but it's complicating a few things like the merger, Paramount's merger with Skydance is complicating that. Media lawyers are saying that this could open up the door to more lawsuits against other news outlets. It could also lead to shareholder lawsuits, especially if he wins a big judgment. And they're saying that Paramount's also concerned that it could lead to legal liabilities because it may not be covered by corporate insurance policies on top of it. So there's a lot behind it that goes on with that.
Exactly. Good luck with that. And again, they're trying to get that deal done with ByteDance.
Is Paramount sold? I mean,
No, it hasn't closed.
It hasn't closed
and
yet.
it gives wonderful leverage to President Trump and his legal team because one of the issues kind of slowing down the closing of this deal is this litigation out there. So could be a good time for President Trump and his team.
Okay.
Yeah.
Egg prices, just real quickly.
Yes.
How long does it take for like more chickens to make more chickens so we have more eggs? How long does that whole thing work?
Crazy. I mean, it's crazy. Yeah, no, it's funny because the data shows that their flock of egg-laying hens, it dropped to a 9-year low in January. So
Right,
they're
just make
not
some more
laying
hens
the
out there.
eggs. They're not laying
Whoever
eggs. They don't
does
have
that
enough
for us.
chickens to
Last
lay the
night,
eggs.
for the first time, I ordered groceries, and there were no eggs.
None?
None.
Oh, see?
Must have been 15 different choices. Out of stock. Lisa Mateo, thank you so much. Newspapers, I greatly appreciate that.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern, on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.